As of the market close on the Australian Securities Exchange on October 6, 2025, Lynas Rare Earths, trading under the ticker LYC, closed at $19.36 Australian. This marks a significant gain of 7.20% for the day, a powerful move that has pushed the stock to a decade-long high. But while the price action is grabbing headlines, the real story isn't just about today's impressive surge. The market's expectation is that Lynas is simply riding the wave of geopolitical tensions and broad-based demand for critical minerals. The reality, however, is far more intricate, involving a delicate balance of operational breakthroughs, lingering sovereign risks, and a strategic repositioning that has been years in the making. Investors are cheering the stock's ascent, but many are failing to grasp the fundamental shifts occurring within the company that are driving this rally, shifts that suggest this may be more than just a fleeting, sentiment-driven peak. The prevailing belief is that Lynas's fortune is inextricably tied to the whims of U.S.-China relations and the global push to diversify supply chains away from Chinese dominance in the rare earth sector. And to be clear, that narrative holds considerable weight. Every headline hinting at export restrictions from China sends a wave of buyers toward Lynas, the most significant producer of separated rare earths outside of China. This geopolitical tailwind is undeniable and provides a strong foundational support for the stock. Many investors, looking at this through a simplified lens, see Lynas as a straightforward hedge against supply chain disruption. They might use platforms like Schwab Intelligent Portfolios or SoFi Invest looking for exposure to this theme, and Lynas stock appears to be the perfect fit. However, to stop the analysis there is to miss the crucial internal developments that are truly shaping the company's future valuation. The reality is that Lynas is not just a passive beneficiary of geopolitical instability. It is actively transforming its operational capabilities and market position. Let's dissect the recent stock movement. The surge to $19.50 intraday wasn't a random spike. It was built on weeks of accumulating momentum, with the stock up nearly 35% in the last month alone. Trading volumes have been robust, consistently above the daily average, indicating strong institutional interest. This isn't just retail speculation on Robinhood. Major funds are building positions. But what's really underpinning this confidence is a series of strategic victories. The most significant of these has been the successful commencement of heavy rare earth separation at its Malaysian facility. For years, Lynas was primarily a story about light rare earths like neodymium and praseodymium, NdPr, which are critical for magnets in electric vehicles and wind turbines. The successful production of dysprosium and terbium oxides, key heavy rare earths, fundamentally alters the company's value proposition. This isn't just a new product line. It's an entry into a higher margin segment of the market where Chinese control is even more pronounced. This operational milestone, largely overlooked by those focused solely on the macro-political drama, is a far more durable catalyst for growth. Furthermore, the recent regulatory clarity from the Malaysian government extending Lynas's license to import and process rare earth concentrate until March 2026 cannot be overstated. For years, the stock has been discounted due to the perceived sovereign risk associated with its Malaysian operations. The constant threat of a regulatory crackdown or a license revocation created a significant overhang. While risks certainly remain, this extension provides a runway of operational stability that allows the company to execute on its expansion plans with greater certainty. This de-risking event has been a key factor in attracting investors who were previously sitting on the sidelines, perhaps managing their portfolios through Fidelity Wealth Management or Interactive Brokers, and were wary of the political uncertainties. The successful $750 million capital raising in August is a direct consequence of this renewed confidence, providing the necessary funding to advance its Kalgoorlie processing facility in Western Australia and other strategic growth projects. Comment below on whether you believe the Malaysian government will grant a further extension beyond 2026. Now, let's step back and look at what Lynas actually does. The company operates on an integrated model, from mine to market. It all starts at the Mount Weld mine in Western Australia, which is one of the richest known deposits of rare earths in the world. The ore is mined and initially processed on-site into a concentrate. This concentrate is then shipped to Lynas's advanced materials plant in Kuantan, Malaysia for the complex and challenging process of separating the individual rare earth oxides. These high-purity products are then sold to customers globally, primarily in Japan, Europe, and North America, who use them in a vast array of high-tech applications, including magnets for Apple stock iPhones, components for NVIDIA stock-powered data centers, and of course, the motors for Tesla stock electric vehicles. This vertical integration gives Lynas a significant advantage in terms of provenance and supply chain security, a key selling point for customers seeking to reduce their reliance on China. The company's financials reflect a story of heavy investment. The fiscal year 2025 saw a sharp drop in net profit to just $8 million Australian, a figure that initially spooked the market. This was largely due to increased depreciation and costs associated with its ambitious expansion projects. However, looking past the headline profit number, revenue actually increased to over $556 million, and analysts are forecasting a dramatic ramp-up to over $1 billion by 2026. This is the classic expectation versus reality scenario. The market initially reacted to the lower profit, but the deeper reality is a company aggressively investing for a future where demand for its products is set to explode. Looking ahead, the future outlook for Lynas is a compelling mix of immense opportunity and tangible risks. The primary catalyst remains the accelerating global demand for rare earths, driven by the electric vehicle transition and the build-out of renewable energy infrastructure. The International Energy Agency predicts that demand for these critical minerals will need to increase sevenfold by 2040 to meet clean energy goals. As the only major non-Chinese producer, Lynas is uniquely positioned to capture a significant share of this growth. The development of the Kalgoorlie facility is crucial in this regard. This new plant will handle the initial cracking and leaching of the concentrate from Mount Weld, which will not only expand overall capacity but also remove the more controversial radioactive element generating processes from Malaysia, further mitigating regulatory risk there. This strategic diversification of its processing footprint is a shrewd move that many investors are not fully appreciating. They see it as a capital expenditure, but in reality, it's a strategic de-risking of the entire business model, something that savvy investors utilizing more sophisticated trading platforms like Interactive Brokers would understand. However, the path forward is not without its challenges. Execution risk is paramount. Lynas is juggling multiple large-scale industrial projects simultaneously, and any delays or cost overruns could negatively impact sentiment and financials. The company is also exposed to the volatile pricing of rare earth elements, which can fluctuate based on Chinese production quotas and global economic conditions. While the current price environment is favorable, a sudden downturn could pressure margins. And of course, the political situation in Malaysia remains a long-term variable that cannot be entirely dismissed. While the current government has been supportive, future administrations could adopt a different stance. Self-investing requires a careful consideration of these risks, whether you're using SoFi Invest, Robinhood, or a more traditional individual brokerage account with a provider like Fidelity. In conclusion, the story of Lynas Rare Earths is a powerful illustration of the gap between surface-level market expectations and the deeper operational and strategic reality. The expectation is that this is a simple geopolitical play, a stock that rises and falls with US-China tensions. The reality is that Lynas is in the midst of a profound corporate transformation. It is expanding its product portfolio into higher-value heavy rare earths, strategically de-risking its processing operations by building a new facility in Australia and securing the funding needed to fuel its next phase of growth. The recent surge to a decade high is not just a reaction to favorable headlines. It's the market beginning to recognize the fundamental strengths of a company that has positioned itself as an indispensable node in the world's future-facing supply chains. While the ride will undoubtedly be volatile, the underlying reality of what Lynas is building appears far more robust than the simplistic expectations that have defined its narrative for so long.